All right, unfortunately, some more bad numbers coming out in the last 24, 48 hours, globally as well as here in the United States. The housing downturn, the PMIs, and a lousy durable goods report. The Atlanta Fed has marked down its GDP for the third quarter after the first half was negative. I hate bad news, but you got to be realistic about this. And of course, the Fed crowd is meeting in Jackson Hole, and the markets are going to have to react to that. Joining us now is John Carney, Breitbart News economics and finance editor, and Breitbart Business Digest co-author, and Alex Marlow, who is the Breitbart News editor-in-chief and also Breitbart Business Digest co-author. Alex, I didn't want to shortchange you, but you have two titles. John just has one title. So, fellas, I'm reading you. I love reading your stuff, by the way. It's a very good perspective and very accurate.
Thanks, Larry.
Alex, I'll start with you.
Thank you.
Gathering clouds of a global recession. This is from the purchasing managers, the global purchasing managers. That includes the USA, I take it?
Yeah, it does. And this is a global index where they're looking at Europe, they're looking at Asia, and we saw bad numbers coming out of Australia, bad numbers coming out of Japan, and some really bad stuff coming out of Europe that's really seeing two issues. First of all, of course, there's an energy crisis there because they got deeply tied due to their globalism to Russia, and we don't know what's going to happen as we head into what could be a very cold winter there. But also, we're seeing a massive glut in inventory. We're seeing a lot of products that are finally getting made after the big pandemic slowdown, and now people don't want them because they're concerned economically. So there's a huge amount of inventory there that's not getting sold off.
And John Carney, also included in this, the other piece, services sector collapsed in August as demand cratered and economy shrank for second straight month. That's what the PMI for the U.S. is showing. So the services sector is in trouble. We've already seen the weakness in the manufacturing sector. Is that right, John?
That's right. We really expected the services sector to be growing right now, except that inflation came around. Inflation is so high that it is hurting people's spending on discretionary. So instead of going out to eat, you're spending so much just for groceries, you can't bring your family out. Gasoline prices were very high. They've come down, but they were very high. That cut into family budgets as well. And so we thought we'd see this handoff where people would slow down spending on goods. That's fine. We all filled our houses up with a lot of stuff during the pandemic and start spending on services. That's not happening, and that's really putting us in danger of a much deeper downturn than what we saw in the first half of the year.
And John, just to follow up on that, gas prices have come down a little more than $1. Good. I remember when they were $2 a gallon, but we'll leave that aside for another segment. Food prices, grocery prices are very high and rising. Like the 3-month change is faster than the 12-month change, John. And I don't think any amount of student debt cancellation is going to offset the rising prices of groceries.
It's going to make it much worse, Larry. When you tell people you don't have to use your money to pay your debts anymore, what are they going to do? Especially young people, people who this will be most affected by this, are going to spend. So this will add to aggregate demand without producing any more supply in the market. So this is going to lower some people's ability to consume by raising prices. So this is pro-inflationary. I think it's going to add almost half a percentage point to inflation. What does that mean? That means that Jerome Powell's job is going to be even harder. They're going to have to hike even further because the inflationary pressure coming out of this one bill.
So, Alex Marlow, let's go to there. The Fed is gathering the great, the near great, the socialists, the big government crowd, et cetera, et cetera. They're all going to Jackson Hole, which is a lovely place. But the question is, what's going to come out of that? Because you all have been writing, and I think it's been very clever, good stuff, that in many ways the stock market thought, now that may be erased because the Dow's off 1,000 points in recent days, but the stock market thought Jay Powell and the Fed was bluffing about fighting inflation. And John Carney suggesting that this loan cancellation business, combined with everything else going on, inflation may be higher, not lower. What do you expect coming out of the Fed meeting, Alex?
Well, it's hard to know, but we know that the Fed has only got one tool, and that's to raise rates. It's just a matter of how much they would do it. And I guess the inside straight for them would be to try to raise unemployment up a little bit, to try to get that inflation under control. But that, of course, runs the risk of a bigger slowdown economically than what we could possibly see. We're already in a recession, according to the vast majority of Americans. That's my personal opinion as well. And he's got a real puzzle to piece together, because if he raises rates too much, you could see somewhat of a slowdown that's beyond what was necessary.
Well, the time for that, puzzling over that trade-off, John, was a year ago. I mean, the Fed should have moved, and they didn't. They're twiddling their thumbs. I mean, I address it to both of you. So let me just ask one more thing. Alex, the Atlanta Fed GDP tracker has been marked down again. Now, they were at 2.5% for Q3, 2 weeks ago, then 1.6, now 1.4. I don't know if that's going to stay above water. You think we're in a recession. I tend to agree. I mean, Atlanta Fed may not be perfect, but it's an interesting tracker. It's giving you the same trends you all are reporting on, Alex.
Yeah, exactly. And let's not forget, Larry, that we just came through a real surreal news cycle where we were sold something to the public called the Inflation Reduction Act, which does not reduce inflation. This should be a massive scandal. And this happened, and we kind of let it go through the news cycle in a week or two. It's an unbelievable thing. And of course, the student loan forgiveness is not really loan forgiveness. It's really a debt transfer to people who chose to go to work or pay down their loans. It's all inflationary, all of it.
John Carney, I'm doing my best, John, on a nightly basis. I'm doing my best. The cavalry's coming. Repeal the bill.
You're doing a great job.
Repeal
Larry.
Socialism. I'm trying to repeal everything. That's the problem. Normally, I'm a very optimistic, upbeat kind of guy. I'm sitting around here talking repeal. But you know what? You guys are right. We should repeal all this stuff. And they can't even produce the goods. I don't have time to go through their economic forecast. They can't even produce the goods, for God's sakes. Less than 2% growth for 10 years. That's pathetic. Anyway, Alex Marlow, John Carney, Breitbart, you're both terrific. We'll have you back as soon as we can.